Hey everyone, welcome back to another episode of our Greene Realty live stream. I'm here with Amber,
Hello.
and today we're diving into one of the most talked about topics in real estate right now, which is mortgages, rates, all those
Yes,
good
all
things.
the fun things.
Lots of
And
fun.
right. And joining us today is Jake Frecker with Integrity Mortgage Group, and he is one of our favorite lenders and favorite human beings. And he graciously agreed to come and meet with us today. And so we've got a lot of questions for him. He's got a wealth of knowledge. He has a really good way of making this whole mortgage thing a lot less scary. So we're gonna put him on the hot seat and ask him all of our questions. And feel free to if you're joining us live, ask any questions that you have as well.
Yeah.
All
Thank
right.
you guys for having me.
Thanks for being here,
Try to
Jay.
make it sound fun, more fun than it is.
That's try to do here is make everything a little less scary, a little
Right.
more fun, right? So why don't we just go ahead and rip off the Band-Aid? All right, let's get into it, right? Like what's going on with mortgage rates right now?
3%. They're 3%. Business is booming. So no, they're not 3%. So they, I always like to address the Federal Reserve when people start asking about interest rates. So
Mhm.
if you have any form of social media, as we all do, people advertise all the time. Hey, the Fed's meeting here. In the last couple of Fed meetings, the Federal Reserve has dropped the Federal Reserve rate. Well, that is not the mortgage rate. They're somewhat correlated, but they're not the same thing.
Yeah.
And so I'll give you kind of an example. So in the September Fed meeting, leading up to that meeting, they had said, we're dropping rates. We're going to drop the Fed rate. Well, the way that mortgage rates and the mortgage market handles that, they go off of data and news and media. So because that was advertised that they were dropping rates in September, the mortgage rates had already baked that in for the 3 or 4 weeks leading up to that. So
Right.
what happened? They got to that September Fed meeting. They did drop the Fed rate, which is great, but mortgage markets follow the commentary and inflation data and job data and some of the commentary that the Federal Reserve Chairman made mortgage rates go up that same afternoon.
Yeah.
The same just happened at the October Fed meeting. They had said they were going to drop it. Mortgage rates kind of baked that in. Some of the commentary that they had said made mortgage rates trickle back up. So I want to stress the Fed rate is not the mortgage rate. They're somewhat correlated, but not directly.
Right.
People think they are directly correlated.
100%.
Oh, they do.
Yeah.
And
Yeah.
then they read something online or they see something on TV
Mhm.
and they're convinced that rates are going to drop. And then they're upset when they don't. And then they pull back a little bit more as buyers.
100%.
So, and we're seeing some of that right now. We are seeing buyers that want to move, but I think they're having a hard time wrapping their head around the fact that rates aren't as low as they once were, and they're hoping that those rates will drop again, back to I think people have finally figured out we're not going to go back to 3% again.
Yeah.
I guess a question would be, and this is a tough one, do you think we'll ever get back to 5? I mean, what is your thought? I mean, it's hard. Obviously, you're just going to give an opinion
Right.
but what are your thoughts?
Hold a gun to my head.
I have buyers ask me all the time, "What's the lowest you think rates will go again?"
Yeah. I get it a lot too.
Right?
Yeah. Oh yeah.
And
Yeah.
then I'm always like, "Ask Jake Frecker.
Right.
Here's his number."
Let me be the Grim Reaper and kill the mood.
Yeah.
Now I genuinely think things will probably level off in the fives. When
Okay.
that's going to happen, I don't know, but I genuinely think that rates will probably level off in the fives.
Yeah.
Could I be wrong? I don't think we'll see 2-3% for a long, long, long time.
I don't know if ever.
Yeah.
What do you think?
It was. I don't think so.
Yeah.
I mean, not. I mean, I'll be 50, 60 if and when it ever happens again. So I don't know. It was great
Wait,
for business, but
What's so bad about being 50, Jake?
nothing. No, I was just saying it. I'm a ways off from it.
Well, it's a lot of fun.
So no, I
Yeah.
think they'll level off in the fives, honestly. And
Yeah.
there's a lot of commentary. The Fed rate's not directly tied to the mortgage rate, but there's a lot of talk that we're going to get a new Fed chairman here, spring, early summer of 26, and I think some change could come with that too if
Yeah.
all goes as planned.
That makes me feel good because I've been saying maybe 5. Like I sort of feel like for some reason I sort of feel like it's going to be low 5s one of these days, sooner rather than later.
Yeah.
Yeah. I mean you could see fives now for the right scenario. I mean, but Heather and I were talking when I got here earlier. I don't know that we're in the new norm, but we're going on rates being in this arena for 2-3 years now.
Yeah.
So and it's one of those things you kind of get your mind right with it. But I do think we'll see some relief and see stuff consistently in the fives at
Yeah.
some point. We're just not quite there yet. So.
Yeah.
Yeah. And I just try to encourage buyers to don't pull back, because once the rates do go down, then you're going to have a lot more competition as a buyer because all the buyers are
100%.
going to come out.
Right.
So,
And you can always refi,
yes.
you know? I mean, I
Absolutely.
hate to say, and what did they used to say? Date the rate,
Marry
marry the
date the rate.
house.
Yeah.
I mean,
Yeah.
I think that can be kind of
Yeah.
irresponsible to say
Yeah.
because we never really know when rates are going down.
Most people are
but-
going to say we're going to tell people that because we
Yeah.
make
I
livings
think
by
it's
people buying homes.
Sure.
I think
Yeah.
it's cheesy too.
I think it's cheesy.
It's a little-
Yeah.
it is a
Yeah, so
little
I try
cheesy.
never to say that, but I mean, it's
Yeah.
a reality.
Right.
Right now could be a great time to buy because once rates do go down, maybe in the spring,
Mhm.
if they do,
Yeah.
we're going to see the market flooded again with a bunch
Absolutely.
of buyers, which increases the competition, and then prices are going to go up. You might
Yeah.
have the lower rates, but the prices will go up, so it could just average out, right?
No doubt about it. People, and I'm not hearing it as much now as I was a year and a half ago, but the amount of times I would hear, "Oh, I'm just going to wait for prices to drop, or the market's going to crash."
Mhm.
It would take something drastic for prices to drop. I mean, and you
Yeah.
guys know that better than I
Yeah.
do, but I think where the relief's going to come is through rates, and these prices I think are here to stay. Indiana's just been such an undervalued market, and there's a lot of people coming here.
Mhm.
We've got an office in Crawfordsville, so we see
Mhm.
a lot of overflow from Illinois. A lot of people just
Oh,
move over
yeah.
the state line to
Yeah.
avoid the higher property taxes. So there's a lot of people that are looking to move here. So I
Yeah.
think these prices are here. I really do.
Yeah. Yeah. I definitely agree. So, on the topic of just refinancing, I know a lot of homeowners who have bought in the
Mhm.
last few years, and the rates are a little bit lower
Mhm.
than we've seen.
Yeah.
I mean, they're not the 2 or 3s anymore, but does it make sense for people to refi right now? What are your thoughts on that?
Yeah, everybody's scenario is different, and that's what I try to stress to people. I got a refi going right now. They're saving $85 a month.
Mhm.
$85 a month means a lot more to person A than person B. Everybody's scenario is different.
Yeah.
So there's some people, and I've heard people say, you don't want to refi until your rate's 0.75% lower or 1% lower. Okay, sure, but sometimes again, some people that are paycheck to paycheck, that $50 to $100 a month savings, it can make or break them. So,
Oh, yeah.
more of the story, I mean, if you bought, I'd say late 23, early 24, that's when rates were really, if I'm thinking right, that's when they were at their peak, high sevens, low eights.
Yeah.
So, I mean, we've fired up a lot of refis for people that bought in that window because
Yeah.
the conversation is, well, what if they get lower? Well, sure. What if they don't? Are you happy with the savings you can get right now? So, and that's why I stress to people, you need an honest opinion.
You do.
I have seen it more times in the last 2 months than I have ever. A lot of people are just getting poached by these big national companies,
Mhm.
and they're just getting charged left and right. And so you need an honest opinion, and sometimes it makes sense and sometimes it doesn't. But
Yeah.
you need to take a look if it's worth your while.
Yeah, you do. And that's why I always stress to my clients, like, go with somebody local.
Yes.
Let's go with someone
Right.
local.
The times that I've had trouble with closings, it's always been some out of state online internet lender type
Mhm.
thing.
Oh, yeah.
And local is always better.
Mhm.
Oh, yeah, that's number one. When I meet with new buyers, I always talk about,
Yeah.
let's look at a local lender, and here's why.
Yeah.
I want to ask you about home improvement refis. Do you do
Yeah.
very many of those?
Yeah, I mean,
Is that what people HELOC? Would that be a HELOC, or would is it?
you could do an array of things. I mean, you could do a HELOC. So if you're one of those people that bought around COVID and you've got a sub 3% rate, you would hate to refinance. Everybody's got equity, right?
Yeah.
So you
Yeah.
would hate to
You'd hate.
refinance and lose that nice 2.25 rate or whatever you got. So, I mean, a lot of people are doing second mortgages or HELOCs, like you said.
Mhm.
So
Yeah.
again, everybody's scenario is different, but very seldomly, if you bought around COVID time, you're not going to hear me recommend, hey, let's do a cash out
do-
refi and lose that pretty rate. We'll
Oh,
go
yeah.
Just
with
depends
this.
on what your rate is on
Absolutely.
that.
Yep. Absolutely. So,
Okay.
and sometimes it makes sense. I mean, you mentioned home improvement. I mean, there's different avenues you could go about home improvement, but some people are just doing like debt consolidation. If they're paying off a car loan that's 9%, it may make sense to refi the rate from a 5 to a 6.5, maybe, because
Sure.
overall they may save in the long run or their monthly
Yeah.
budget's going to go down. So,
Yeah.
Yeah, I didn't even think about that.
Let's get into something we see all the time. I see this all the time, and I bet you do too. People changing jobs right before they buy a home. So,
Always makes me nervous.
Ah,
What
Man,
does
yeah,
that do?
100%.
Yeah, what does that look like? What is that? How does that change the scenario for them as a buyer?
Yeah. Well,
Mm-hmm.
so something that we're running into a lot right now, and I know I've got buddies that work at other mortgage companies, so I know it's a universal thing, variable income. And
Yeah.
it seems
Yeah.
like, I got into this business probably like 8 to 10 years ago. So pre-COVID. And pre-COVID, it wasn't really an issue. Everybody worked 40 hours a week and it
Mm-hmm.
just was what it was. The employer didn't allow it. Well, ever since COVID, obviously everybody's pay was jacked up during COVID. So it seems like ever since COVID, employers have become more user friendly with that. So to kind of piggyback off your question, a job change in itself is not a deal killer, but it
Okay.
depends on
That's good.
yeah, yeah.
No.
It depends on what your pay structure is going to look like and so on and so forth. So I'll use a real world example. I had a guy, I can't remember what he did, but he had a 6 year salary job. He was making 70 grand a year. He left that job like 2 months ago. So he just called me to get pre-approved last week. So he left that job 2 months ago,
Mm-hmm.
and now he's base plus commission. So he gets a base 40 grand salary, but with commissions he can make 200 grand a year. So that's great, other than you haven't made 200 grand a year yet, right?
Mm-hmm.
So how do we know that you can sell and reach that $200,000 a year earning? So in the mortgage world, if you change jobs and you've got variable income, basically, and that's commission, that could be overtime, even if you're just an hourly employee and your hours are up and down. If
Mm-hmm.
you're on that job a short stint anymore, they're going to require you to be on that job 12 months before they can use that income to qualify you.
We had somebody that I, yeah,
Yes, 100%.
remember?
Yep.
Yeah, a couple months
Yep.
ago.
I
Yeah.
remember. Yeah.
Yeah,
Same
we'll be
thing.
picking her back up
Yeah. She'll be
first of
back.
the year,
Yep.
but
Yeah.
I got a reminder on my calendar, actually. I can't remember her name offhand.
Haley.
So yeah.
Yeah.
Yep.
Yeah.
Yeah.
She's awesome.
What's uh, how much employment history do you need to have? Isn't it two? It used to be 2 years. Is
Yep.
that still
Yep.
2 years at the same job?
Not same job.
Just employment in general.
Yeah.
Mhm.
And so, I mean, any lender's going to need 2 years of work history, but it can be 5 or 6 jobs that go into that. So
Okay.
that's a great question, because I still every week I get, I'm worried about applying. I've not been at my job but a year, whatever. That's okay. As long as we can verify you worked somewhere prior, that's the key. Now, some programs are more picky on if you have like FHA, if you have 3 or more job changes in a year, it's not a deal killer, but they sniff it a little bit harder. So,
Okay.
Okay.
and again, to kind of piggyback, college education, they'll use college education as part of that work history too. So if you've got somebody that just got out of college and they've got a job as let's say she was going to school to be an RN and she's got a RN job lined up at IU Health
Mhm.
and she's never worked a day in her life, we can verify that she was in college. Just get her college transcripts, like you would a W-2 for somebody that had been working. Verify she was taking courses. Verify the pay at the new job and roll on. So definitely
Wow.
do not
Okay.
need 2 years at the same job.
That's
Definitely not.
I didn't know that about college.
Yep.
I didn't
learned that.
either.
I learned something that I learned that today.
Me too.
Well, good.
Professor Jake.
That may be the only thing you learned
Professor
today. So,
Frecker.
Yeah, we've learned a lot.
Yeah.
Yeah.
Okay,
we
I
did.
didn't not realize that.
Yeah.
So
Yeah.
if you
Yep.
go from college into your job, that's good. That's good for young college grads because rent is so high.
Oh yeah.
You know,
Oh gosh.
so if they
Yeah.
can jump into buying a home right away, if that's what they want to do, that's good to know.
100%.
It
Yeah.
is
Okay.
good to know.
Yep.
Yeah,
Right.
because a lot of people don't think that they
No.
can do that yet. So yeah.
And it's a nice little twist. A lot of people don't realize that. So
Yeah, that's awesome. So let's do a little rapid fire round. If
Let's
you,
do it. Let's do it.
all right, are you ready?
I think so.
Okay, all right. So my first question: what is the best loan type for a first-time buyer, in your opinion?
Mm.
And I'm sure that can
Ooh.
maybe differ, but
Yeah.
so I don't mean to stump you.
No,
but
no. I mean, if you've got 680 plus credit score, I would say there's we obviously all know what a conventional mortgage is, but it's called Home Ready or Home Possible,
okay.
and it's still a conventional mortgage. One is Home Ready's backed by Fannie Mae.
Mhm.
Home Ready or Home Possible is backed by Freddie Mac. It's a 3% down conventional loan because standardly conventionals
Nice.
5% down, but rates are better on it, and your monthly PMI, your monthly mortgage insurance, is cheaper on those. So that's a tough program to beat. It's pretty minimal money down,
Mhm.
so. I mean, I push a lot of people that direction. Now, you hit the nail on the head. If you've got a lower score or you don't have the ability to swing a down payment whatsoever, there may be a different avenue we look. But you've got a 680 plus credit score and you've got a little bit of money or can come up with 3% down, it's kind of a no-brainer in my opinion.
Yeah.
Ooh, it's a good one.
Yeah. And what was that called again, Jake?
Home Ready, Home Possible.
Home Ready, Home Possible.
Yep.
Okay, I
So
got to
one's Fannie
remember
Mae
that.
back. Yeah, one's Fannie Mae
And so
back,
and
one's
that's
Freddie Mac.
3% down.
Yep.
Okay.
minimum. Yep.
Minimum. Okay. And
680
then
credit score.
680. Okay.
And you don't have to. I mean, you could go. There's cases you can go below 680 too. It's
Okay.
just sometimes on a conventional loan, start to get below 680, 700. The rate gets a little bit uglier, so that's why I say 680. But technically, there's cases you could go below if the
Okay.
scenario
Okay.
was right.
That's a
So
good one.
yeah,
Yeah.
so
Yeah.
it's a solid program. That's I push a lot of people that direction.
Yeah. Sounds like a no-brainer for
Mhm.
sure. So, okay. So you did great on that one.
Well,
So
good.
here's your second one.
All right.
Is now a good time to refinance if your rate starts with a 6?
Ooh.
Hmm.
Okay.
This week, maybe not. Maybe not. Um, so if you're high sixes, yeah, I mean
Yeah.
it's worth having the conversation, and especially depending on your loan size. If you've got $150,000 loan, the difference of a 6.9 and a 6.25, you're not going to feel it as much, right? Because it's a smaller
Mhm.
loan. Now, if you got a $400,000 loan and you're at a 6.9 and you can get to a 6.25, yeah, that you'll feel that a little bit more in your monthly payment. So
Okay.
for depending on the loan program, because FHA, VA, USDA, those rates are always a little bit better than conventional rates, just because they're government backed.
Right.
So especially on those, I mean, there's some of those government backed loan scenarios you can still see stuff in the fives with no hidden points or anything like that. So
Oh, wow. Okay.
short answer to your question, I'd say if you're high sixes, it's a decent time to take a look.
Okay.
High sixes.
Yeah.
Okay.
Yeah.
I'm ready
That's
for
good
the
to know.
stumper.
Uh,
I'm gonna stump you. Okay.
leave it to you.
All right. Credit score or down payment? Which matters more for your rate?
Credit score.
Yeah.
Okay.
Credit score. Yeah. I mean, down payment, loan to value, that definitely plays a factor, especially depending on your loan program. But credit score is the bigger piece to the puzzle when it comes to determining your interest rate, because that credit score tends to drive your loan program. So those are the two. Again,
Right.
just as I said, some loan programs carry a little bit better rates than others. So definitely, I'd say credit score.
And I think a lot of people, a lot of first time home buyers in particular, they will
Mhm.
always say, well, what do I have to, what's my credit score have to be in order to get a mortgage?
Mhm.
Yeah.
How would you answer that question? What's the lowest score that you can potentially work with?
I tell people, if you got a 580 credit score and a pulse, let's give it a try.
580 and a
580 and a pulse, let's give it a try.
loan program for that?
Well, I would,
580
if I made the
580 plus
rules,
the
hey, I would tell you, if everybody, if I made the rules, we'd all be getting loans. So no,
so 580. Okay,
580.
so 580 basically, and I think a lot of people too, a lot of first time home buyers, they are looking on, I can't even think of the name of it now. They look online to look for their
Mhm.
credit score.
Yep. Well, like
Like Experian
Experian,
or
Credit
Credit
Karma.
Karma.
Credit
Yep,
Karma,
Credit
that's the
Karma.
one.
Yep.
Because Credit Karma, your score on Credit Karma may not really be what it is.
Yeah.
And so you need to not really focus on that.
Mhm.
Yeah.
Basically, call your mortgage lender and then you're going to pull it from the sources it needs to be pulled from,
Correct.
which may not be online Credit Karma.
Exactly. And
Okay.
Yeah.
that's a great point, because there's three main credit bureaus: Equifax, Experian, and TransUnion.
Mhm.
So we all pull from the same bureaus, but why, like Credit Karma, I'll use I've got a Discover credit card, and Discover will give me a FICO score.
Yes.
Well,
Yeah.
I'm speaking from experience. Anytime I go look at my Discover app, it'll say my score is X, and I go to apply for a mortgage, and my score's 15 points lower. Well, the reason for that, and this Credit Karma is a big one, 9 times out of 10, if somebody tells me their credit score on Karma is 700, we're going to pull a little bit lower. And it's not that we're
Okay.
using different credit bureaus. There's just different scoring models, basically.
Okay.
And
Right.
so I have to, again, on the Grim Reaper, I have to tell people, like, I had
They're
a guy
like, wait, Credit Karma said this.
Oh, and they get
Yeah.
mad at me. I'm like, I want you to have a higher score. Trust me. But right, yeah.
He's happy.
So it
Yeah.
just people aren't educated. So that's a great point.
Okay.
But moral of the story, Karma's not all bad. Like, if you've got, I tell people to refer to Karma a lot. Like, if they can't qualify now due to their score, I will say, check out Karma. It's not
Yeah.
going to give you the exact score, but if
It-
Karma's going up, we're going up too. It's just,
Yeah.
Right.
you're trending the right direction to see if you're doing the right thing or not.
Yeah.
So that's a great point.
Yeah. That's good to know for sure.
Right. Because
Yeah.
I get that question so much.
Yep.
And it's a hard one.
Oh yeah.
And
And you don't want to sound negative.
I'm just going to say,
but-
I'm just going to fill their pulse and say, here's Jake's number.
Yep. Let's give it all we got.
Yeah, he's going to give it the.
Yeah, we'll give it the college try.
Sure.
Yeah.
Okay. You know.
I'll be the bad guy. I'm
Yeah.
good at that. So
Yeah.
But you mentioned credit score, Amber. So technically, there's programs we can go down to 500 as well. But It's like FHA, for example, will go to 500. You need at least 10% down. So kind of, typically your first time buyers aren't going to have 10% down, but FHA will consider credit scores down to 500.
See, and again, this is why it's important, and I wish I could just grab every young couple or every young person
Mhm.
and say to them, don't go online
Mhm.
don't go to Rocket Mortgage online to try to get approved, because Rocket Mortgage isn't going to be able to look at your whole picture the way you're just talking about. Because
Right.
maybe if you do have a credit score lower than 580, there's a way.
Yeah.
Because maybe if you've got more money, and sometimes money can be gifted for down payments as well.
Right.
No doubt.
And so you can talk through those things, because it's not black and white. Getting a mortgage is more gray,
Never.
I would say.
Yeah.
And so if you can't really go through all those gray scenarios online.
No doubt
That's
about
why
it.
you got to
Yeah.
get somebody on the phone and talk to them. And I always tell people, I think you're very easy to talk to
Mhm.
and very not intimidating,
Mhm.
because I think some people are intimidated about the
No doubt.
idea
Yeah.
of
Yeah.
talking about their
They
credit
are.
score and their money and calling someone to see if they can qualify.
Well, we take a lot of pride in that. I mean,
Yes.
life happens. I got 4 kids. I mean, medical bills come in left and right. Kid
Yep.
breaks their arm. Life happens, and I tell people like I don't judge. I
Yeah.
soften the blow, and
Mhm.
we're good at taking the fire out of people.
Yeah.
Again, it's an intimidating process, and we've all got bills and
Mhm.
kids and life to deal with, and so I tell
Mhm.
people you're preaching to the choir. Let's figure it out,
Yeah.
and we'll get it on the right track.
And
So
and I
Yeah.
think, I mean, I've worked with you for a very long time, and
yeah.
and what you're saying there is true. You do not make people feel embarrassed
Mhm.
or,
Right.
and
Yeah,
people,
there's no
yeah,
stupid questions,
No.
right.
know?
And people
No.
come at it like that. They're worried.
Oh, they
So,
do. And
They do.
and you said there's zero stupid questions. I mean,
Yeah.
I genuinely learn something every day. I
Oh, yeah.
I come across a new scenario, or we'll come
Yep.
across something in our office. I'm like, I have not come across that before, and it's
Mhm.
just there's
yeah.
so much. Same with you guys on the real estate. There's
Right.
something new every day.
Yeah,
Oh,
no
yeah.
one deals the same.
No, not at
Yeah.
all.
At first,
Not at all. But
We're a little
Amber,
different.
you were talking about some of these big national lenders, and
Mhm.
while we're having this conversation, they're not all bad. There's
Yeah.
some people that have called some of these bigger companies, and it depends who you get on the horn. If
Mhm.
you,
yeah.
it,
Yeah.
the problem is a lot of these places have big call centers, and they're not all that trained. They've got a script that they follow and how to sell, and that's not
Right.
what you want. But there's decent ones out there. I like to think, but my point to this is I'm kind of pushing more for the refis right now. I've had a lot of people. I had somebody the other day. They bought in 2023, and they sent me a loan estimate from, I can't remember who the heck it was, but they were charging them, and they were saving them like $200 a month on their mortgage, and they were giving them a little bit of cash out, but they were charging them 3.5 points plus various other origination costs to get the loan done. And I'm like, she sent to him. I said, "Girl," I said, "this does not make a lick of sense." And she's like,
No.
"Well, why not? I'm getting a great rate." And that is the problem. The common consumer, they just hear rate, rate, rate. That's all they
Mhm.
hear, and they don't
Mhm.
necessarily think about all that goes into it.
Yeah.
And if you're a young kid, you don't even have to be young. I mean, if you're somebody that doesn't do this every day, and you're just worried about, hey, my mortgage is going down, so I explained to this guy. I said, "Look, was like, I can do the same, but are you in your forever home?" Well, no. Okay, you're rolling 15 grand back into your loan that you're not going to make when you go to sell this thing. And
Right.
she goes, "Wow." I said, "Yeah." So again, to echo your point, there's in this is going to sound corny and salesy, and it's not meant to be, but having boots on the ground makes a huge difference. If I do somebody
Yeah.
wrong, one of you two ladies is going to come wring my neck.
Yeah, we know what you're
Right. So yeah. So I mean,
see you.
right.
Yeah.
So if you're local and you're doing somebody wrong, you're not going to be in business very long, and
Yeah.
that you just don't get that true. Somebody's looking out for you with
Just
some of
love
these
it when
big
I
box
call
lenders.
Jake.
I love it. I love it. I see Amber Green pop up and I tense up. I'm like, oh, here we go. Yes, Amber.
I think I'm scary on the phone. I didn't realize
I just hand
that.
it to Brooke and let
Oh.
Brooke answer.
Oh, yeah. I'm just
No.
going to bat for my clients.
No,
That's
well,
all.
Yeah.
that's what you got to do.
Right.
It is.
And
Right.
we got the same. We all got the same goal: get the ship to shore. Doesn't matter how we get there.
That's right.
Like
Some
this.
waters are smoother.
There you
But-
go. Yeah, I
Yeah.
like that.
Yeah.
You're full of those. Boots on the ground, ship to shore.
Ship to shore.
That's our motto in our
Yeah.
office. An agent, I remember years ago, an agent told my dad, "I don't really give a darn. Just get the ship to shore." Fair enough. We'll get it done. And
Yeah, it doesn't matter.
it's our
It
motto.
doesn't matter how it gets. It's just
Yeah.
like winning the game. It doesn't matter if the win is ugly or
That's
pretty.
right.
It's a win.
Yep.
It's a win.
And that it's like that in real estate.
Oh,
I
it
mean,
is.
Oh,
We-
my
get these people to
gosh.
the closing table. They deserve to be
Yeah.
there.
And
Yeah.
we had one a couple, I don't even know, been a month or so. No, it was some rocky waters. I mean, had to change loan program. There's appraisal issues, and I mean, stuff happens. I mean,
Yeah.
stuff. I'll be the first to tell. I'm not human. Stuff's gonna go wrong.
Yep.
It is. If somebody tells you otherwise, they're full of it. I mean, but
Yep.
you got to
Yeah.
have somebody who's, again, if you panic, the client starts to panic, and it just is. A
You have to
recipe
keep
for
that
disaster.
level head
Yeah.
because you're the trusted expert.
Yes.
Yeah.
Supposedly.
Well,
Right.
give me a minute.
Yep.
That's your motto.
That is my
yes,
motto.
Heather Ludlow. It's all figure outable.
It's all figure outable.
It is.
It is. It's never that deep.
Yeah.
You
Yeah.
know,
9 times out of 10, there's a solution.
There
Now, it may
is.
not be the
What
one
you
that-
want.
Yeah, right.
but we can get there.
Yeah.
Yeah.
And you got to have somebody that, and again, it takes a team. And again, people like us, where you've worked together long enough and you kind of know the systems and the processes, and you just trust that it's going to get taken care of. And if it can't, we got a big problem because nobody's going to figure it out.
Right.
That's right.
So
Yeah.
that's what you want. I mean, it just takes a good team. As a buyer, you just need good people in your corner looking out for you that know
Care.
that they've got, and
That
they got
care.
your best interest. I mean, that's
Yeah.
the biggest thing.
Yeah.
It really is.
And I think all of us here are that way. We have
sure.
everybody's best interests at heart. You
Mhm.
know, for me, I want what's best for the client, not what's best for my wallet.
Mhm.
And that's, I think we've all been there
Yeah.
where we couldn't close
Yeah.
something, but we knew that we served that client the best of our abilities. And
Yep.
so, you know,
Yep.
that was maybe the most
And that
important
client's
part.
going to come back around next time because
It
they're
will-
going to remember that they got treated right.
Absolutely. Absolutely.
I'm the
So,
first to tell you, I had to deal this yesterday afternoon. I'm not going to go into the details because we'd be here all afternoon, but I had a guy, he was a lay down, no brainer file. We submit the file in for clear to close, and the underwriter calls me. And again, I'm not going to go into all the details, but it was just something that nobody could have caught. I mean, nobody could have caught. I didn't catch it. No,
Mhm.
well, nobody caught it. I mean, nobody could have caught it at all. And I'm like, I can fix this, but once an underwriter sees something, they can't unsee it.
right.
So I had to call a buddy at a different mortgage company and say, I got this for you. I need you to get it done. Here's how to do it. And he's like, okay. So, and I get no benefit of it other than the guy's not gonna be homeless, and so
Right.
you just
And
can't
there's
be
your
too proud.
benefit.
Yeah.
Yeah.
Yeah. Now that doesn't happen very often, thank goodness. But
Right.
you just, don't be too proud to admit defeat and
Mhm.
figure out a way to get the person into their house.
Get that ship to shore, if you
I
will.
wasn't gonna say it again, but yeah. Yeah.
Few waters.
Yeah.
Yeah. Yeah.
Rough waters. That's okay though.
Yeah.
That's okay.
So we like to talk about our personal lives a little bit here too. So tell us about you. Like you're a real person outside of mortgages. We'd
got
love to know about
4
you and your
humans.
beautiful
You're
family.
super dad,
and-
right?
I don't even know. My wife is a rock star, thank goodness. So
Yes.
if my kids relied on me, we'd be in trouble. So no, I got 4 kids, live in Pittsburgh. My wife and I have been together. Well, we've been together forever, but we've been married 6 years. So
Aw.
we're building a house out in North Salem, and so we this is gonna be our forever spot. We've
Love
been
that.
married 6 years. I think we've moved 7 times just because.
Right.
Yeah,
Wait, 6 years, moved 7 times, 4 kids.
4 kids.
Your
And
wife is a saint.
Well, I time it up. Every time we move,
Beautiful.
she's like 7 or 8 months pregnant. So she loves to move when she.
And she watches everybody else move the stuff
Oh
around.
no, she's in
Wait.
it. I'm telling you, she's a rock star. Thank
She
God.
is. I
Wow.
met her, and she is a very, very awesome.
Yeah.
How old are your kids?
So Rowan, my daughter's 6. I got Case, he is 4. I got Kai, just turned 2, and Tate, she is 8 months, 9 months. So
Wow. Okay,
Yeah.
so
Wow.
he spread those. Yeah.
Oh.
Every 2 years, there's a
So
new
you're
surprise.
building a house now.
Yep,
When will it be ready?
I'm gonna guess like Mayish.
Okay.
I don't know.
Is there going to be another one on the way at that
No,
point?
I need to call the doctor. I need to call the I need to call the doctor.
Okay, so
I'm done.
Four.
Yeah, my wife would have 10, I'm pretty sure, but
Aw.
I'm done.
Four's good.
She's
That's good.
My wife and
Yeah.
I met when we were like 12. So, and I'm telling you, ever since I met that girl, she wanted to be a mom, and she is awesome at it. And I'm so lucky to have her. So,
Thanks for calling.
yeah, but I told her I
That's
said, I'd
awesome.
like to be able to retire someday. So we're gonna call it quits at 4.
She already had 5 kids.
Well, yeah,
Aren't you one of
pretty
them?
much, yeah, 100%.
No.
I'm never around is my problem. Even when I'm home, this thing's
No.
ringing, and
You
so-
guys are
Yeah.
you guys are a great couple. Beautiful family.
Well, thank you.
Yeah.
So,
I'm very lucky. So,
Yeah.
yeah.
Absolutely.
So it's just constant chaos in our world, but that's okay. We don't
Chaos
have it
is
any other
good.
way. You guys get it. You got kids.
Totally
and
get it.
Every different direction.
Yeah, I don't know what to do when it's too quiet. I kind of get worried.
I don't do well just sitting around.
I don't either.
Mm-mm.
I wouldn't know how to act. I think the world's falling apart if I was just sitting around
Yeah.
twiddling my thumbs. So
Yeah.
Yeah.
controlled chaos.
Controls
Controls chaos.
If there is such a thing.
Absolutely.
Do we have any questions?
How many years after bankruptcy could someone get approved for a mortgage?
Well, that's a good one.
It's a
That
great
is a good
question.
one.
So, two main bankruptcies. Typically, you got a Chapter 13, which is where you're
Mhm.
making payments on whatever you put in your bankruptcy. You make monthly payments. So, if you file a Chapter 13 bankruptcy, it can take a few years for that to get discharged because you got to pay it off. Technically, you can obtain mortgage financing after you've paid on your Chapter 13 bankruptcy for at least 12 months. And there's some
Okay.
different caveats to it, but
Mhm.
I mean, so you can technically buy a house while you're in a bankruptcy. I just closed one for a guy it's been a month or so ago. But
Chapter 13.
Chapter
That's the
13.
reorganization of
Yeah.
your debts.
yes,
Okay.
and that's the stress. That's Chapter 13 is the emphasis there. Now, Chapter 7, that's just where you put everything in it. Well, I mean, you can pick and choose, but you put everything in it. You wipe the slate clean. FHA is probably your most likely option after a Chapter 7 bankruptcy, and you got to be 2 years from your discharge date.
2 years.
2
Okay.
years.
So
Okay.
from your discharge date, not your filing date. So,
Okay.
and it's extremely important for those that may be asked. It's important that once you've filed that bankruptcy and it's done and over with, you want to make sure you reestablish your credit. So I see it a lot where people will put everything they've got in it,
Yeah.
and they'll call, "Hey, I'm 2 years." Okay, great. And I go, and sometimes they don't even have a credit score because they've never
Oh.
reopened anything. So that's a big piece of the puzzle. So you want to make sure you reestablish. And
Okay.
I'll tell you, there's FHA is your most likely option. USDA maybe could do 2 years, and then the
Okay.
rules change. If you have a mortgage, you put the house in the bankruptcy, the timelines change a little bit. So, generally speaking, 2 years from Chapter 7.
Good question.
Yeah.
it's a great
Very good question.
Brett or Jake?
Thanks, Brett.
We can't wait to get Brett on the show.
I know.
She'll flourish.
Yeah, she'll do great.
Curtis. Great.
Oh yeah,
Ah,
thank
Shout
you.
out.
Yeah, no, she's a good girl.
Yeah. I love that.
that's it.
I
All
love
right.
that. Well, awesome. Well, we thank you so much for
Oh,
joining
thank
us
you,
today.
We loved it. Yeah.
No,
You're
thank you
good to
guys.
talk to.
You are.
Ditto.
Yeah.
And shared
I
a
like
lot of
working you
knowledge
guys.
with everyone.
There's a lot of people that you just work with because you got to. I enjoy working with you guys, so I appreciate you.
Like us.
We get to work together. That's
it.
awesome.
You don't have to, right?
We get to.
That's it.
I love that.
No,
Yeah.
Well, thank
Yeah.
you guys.
Yeah. Thanks so much. I learned so much. I know.
One.
Oh, wait. We have one more question, so we won't sign off.
What steps do you have to go through when you are self-employed?
Oh.
Great question. So things change a little bit on those. So generally speaking, and again, if there's other loan officers watching, they're just going to say, "Oh no, you can." I get it. There's always ifs, but
Right.
generally speaking, you need 2 years of filed taxes being self-employed. So that's the downside of it, but it's twofold. One, being self-employed, you tend to be sort of commission, right? I mean,
Right.
you guys know. I mean,
Yeah.
you've got good times and bad, so they want 2 years of filed taxes, generally speaking,
Okay.
to use that income to qualify. And a big piece of that puzzle too, a lot of self-employed people, if they make, I'll just use simple numbers, they make gross 100 grand a year,
Uh-huh.
but they deduct 70 and whatever, so they don't have to pay as much. Well,
Right.
lenders go off of that
Go off the 30.
30 that's
Yeah.
left, and
Yeah.
a lot
Right.
of people don't realize that. So if you're whoever asked that question, if you're thinking that buying a home may be on the horizon, I know it's going to stink, and your accountant's going to say you're crazy. You want to show as much income as you can on taxes. Now,
Yeah.
I'll be thorough. Um, and here's the example I'll use. I'll just use like a hairstylist, cosmetologist.
Mhm.
So I've seen them be W-2 employees. I've seen them be 1099 self-employed.
Mhm.
If you are going into a self-employed role that is translatable to what you were doing W-2'd, we can use
Use
1 year of taxes. So, and
Oh.
again, I'll go back to like the hairstylist. If you're a W-2 commission gal, paying booth rent, or I don't know how it works, but if you were W-2
Yeah.
commission for 5 years and then you go 1099, once you've got 1 year of filed taxes, because we can show it was correlated to what you did before, we can use 1 year.
Hmm.
Right. See,
That's good to
there's
know.
something else I learned.
Yep.
I've learned 3 things today.
I've learned 2 things.
Man.
Wait, did you learn 3 things?
Yeah.
Okay.
The loan product.
Oh, yes, that was
Is that
okay.
okay?
The loan process.
See, No,
Or I learned is that the pull? No, the
580
low.
and a pull.
580. Oh my gosh, I love that.
Yeah, I
No,
do
that's
too.
great
That's
questions. Two great questions
great.
at the tail end.
Yeah. Any other ones, Dustin? We don't want to leave anybody out, but those were awesome
Those were
questions,
awesome.
guys. Thanks so much for sending those our
Yeah.
way. And definitely, if you guys have any other questions that Jake can help with, we can get you connected with him. And his actual mortgage application is in the comments of this live stream. So
Correct.
that's got his info on there. I know his info was on screen, but you can always just get a hold of Amber and I as well.
Sure.
We'd
Sure.
love to connect you. He's great, takes
Yes.
awesome care of our clients, and that's what
And he's
that's
a
what
lot
I
of
like.
fun.
And he
He's
is a lot of fun.
as you can see.
Yeah.
And so we'll be here next week at 1.
At 1.
At 1,
Yeah.
and we're not sure what we're going to talk about yet, but it's sure to be educational
Yep.
and fun.
And fun.
Yes. Two friends talking
Absolutely.
about real estate.
Yep.
So we'll figure something out.
Maybe more exciting than mortgages.
Right?
I think you made this though
You know,
exciting.
Right. And we covered
I mean-
some stuff that I think people always ask about.
Yep.
And that's the point. Is
Yeah.
let's get some of that stuff out there that people want to know.
Yep.
So and we did that. I
Absolutely.
think we did that today. So that's
I
great.
think we did. I
Yeah.
think we did. Really shared a lot of your knowledge, and we appreciate you for being here.
Thank you guys for having me.
Yeah.
Thank
Thank
you.
you so much, Jake. And
Yeah.
thank you everyone for tuning in.
Yeah, we'll see you next week at 1 p.m.
Bye-bye.